Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, everybody, let's look at the stock market, otherwise known as the S&P 500. And these are the futures. Okay, we're not looking at the SPX. Okay, I always look at the futures, guys. So in this case, it's still the June 2022 contracts. And this product is /ES. For those that don't know, you can also trade the E micro, which is what I almost always trade, MES. Okay. So let's take a look what's going on here. So we had this nice crossover earlier in the week right here on the MACD. Okay, this daily chart. Nice crossover. So we got it, let's see. This was the bottom right here, 3807 for this particular, let's call it price wave. Okay, or even the bottom for this particular cycle. Though this could have been the end of this previous cycle and the beginning of this current cycle we're in. Okay, it could be right here. Could even be right there. Okay, we just don't know yet if a new cycle is being developed, a new behavioral cycle. Meaning, I talked about this last week, that the length of this cycle, the cycles we're seeing here, which right now I think are 30. I think it's 31 or 35. 35. Okay, that's what I don't know yet. I don't know yet whether or not this length of this cycle is changing, because it's possible with this, and this. Either one of those could be potentially be a cycle low. So we're going to wait to see how this turns out, and that's going to have a lot to do with what does this action do and where does it settle. Okay. So so what I'm really saying is it's possible that the cycle low has shifted to the right. That would be the most likely scenario if indeed it has happened. Okay. So I don't know if that's going to happen yet until we get a little more data going this way into the future. But let's just say that it did. Okay. Then this might end up being your cycle low right here, where this actual low is. Though it could be this one as well. Let's just say it happens to be this one. Then you might see something more like this. Okay, a cycle that's more like this. Okay, and it might be shorter. Because, right now the cycles, as I said last week, are very long. 35 trading days is a very long cycle. Okay. So let's take a look at what's going on with this price action. So right now, a couple things I'm watching here, okay? The MACD's just crossed over. Now, when this type of thing happens, usually the cycle that it's in, or not usually, but often enough, the cycle that happens in is a strong cycle. And we're I don't know if we're seeing that yet. It's pretty strong at this point, but it could get above this 50. Now today's Memorial Day as I'm doing this video, and I didn't look at the futures calendar and the trading hours, but usually the way this works around holidays is you'll get the previous night, 5 p.m. we'll start trading, so that would be Sunday night, 5 p.m. started, and then it go all the way overnight into the next day, and then at noon, this will all be Central Standard Time here in Texas, or actually they come out of Chicago, but since I'm in the same time zone. Okay. That's how it'll usually go. It'll start at 5 p.m. and they'll close the session at 12 noon. And then it'll reopen at 5. So my guess is right now as it stands, in about 4.5 hours, as I do this video right now, I think it's about 12:30. Let's check my phone here. Okay, phone's being stubborn. Yeah, about 12:25. So in about 4.5 hours, I suspect trading will start up again. But this cycle that we're in, this cycle right here, and this price action right here, this MACD action, I should say. This behavior looks very strong right now. Now, short term, I can see that the Big Daddy's kind of giving little hints. Okay, and the SMI is kind of getting a little bit toppy. But that doesn't necessarily mean that we know for sure that this impetus is going to run out of gas. Now, one of the things I'll be looking for in this cycle is we're right smack dab in the middle of this cycle. Today is, yeah, it really is the 31st. Well, it's the 30th, but the trading day its calendar is for 31, so it's always the next day. Okay, so the middle of that cycle happened about right here. You know, previous trading day. So if this stalls right here and starts coming down, especially this week, okay, if it starts doing that, like strongly coming down, then okay. But the behavior of this MACD tells me that this scenario, I think, is more in play. Now, it doesn't mean it's going to track right along this line. As you can see, it's already got above it. This just kind of averages, right? Now, we may still see some price decline coming into this cycle low here. But I think that just based on what I'm looking at the MACD here, I think we're more inclined to see this to be the big decline, which is, let's see, where is that? August 8th, if I remember right. August 10th is that cycle low right there, okay? So just instinctively, just because of all the history that I have in cycle analysis and looking at the way price moves, and that's what my instincts tell me, that 8-10 would be the big, more of probability of a significant decline, okay? Now, the other thing I'm going to watch is divergence. I'm looking for divergence warnings. This one right here is pretty sure false divergence warning. This happens when you come out of lows, which we have. See how we came out of this low here? Kind of came out of this price low. So I don't give this too much credence when I see this kind of thing. You can see it happened back here. See it right here? See how we got down into this? Price start coming up. You got this little false divergence warning. And why does that happen? Because the logic's not perfect. Okay? You know, I haven't gone through and tried to pick out the exceptions and shore up this divergence logic that's going on behind these dots in both these indicators. I just kind of left it as it is, and I knew that it was good enough, and I just acknowledge the fact that there may be occasional false warnings, and I'm able to pick them out. So that's just where I left it, okay? Because when you get into these things like exceptions, the logic can get really fuzzy, and you got to really deal with a lot of baloney and get in there, and I don't want to deal with all the exceptions, and then the logic just gets really clouded. So it's better just to acknowledge that you're occasionally going to get some false warnings, and they're easy enough to pick out. They're usually at the bottom. Okay. All right. So if I see the stochastic momentum index (SMI), if I see it getting some divergence warnings, you know, some dots, and the big daddy, this one, also gets some dots at the same time, okay, then we can say something's coming. Okay, so an example of that's right back here in April. See how they both have divergence warnings? And it was bombs away from there. So this is kind of a holistic way of looking at what's going to happen in the market. You know, the price action drives, and volume and other things drive how we can interpret what's likely going to happen, okay? So we've got excellent cycle analysis, and that tells part of the story. Like back here, this was a left-hand translation, right? It was on the left-hand side of the middle of the cycle. Okay. This one, I was contemplating, the one we're in now, that this was an extreme left-hand translation because we just had these 3 little days. I still feel like, at least for the moment, this is a weak cycle. But with the MACD being where it's at right now, I mean, this could change, and maybe in the midst of changing very quickly. So this is pretty strong. It's a pretty strong signal from the MACD. Okay, it's kind of got this written on it, right? The way that we see this MACD just gapping, or I should say, yeah, that I'm talking about this gap right there, right? The gap between the lines. If that continues to expand, then we'll be keeping a close eye on this. But so that's kind of the big picture, is me paying attention to any divergence warnings, which at the moment we don't have any. No divergence warnings, okay? We've got a MACD that looks very healthy. All right? We are approaching the 50-day moving average. Okay, we haven't been there in a while. So all that tells me that this cycle low may not, I think it will show up on the radar, so to speak. I don't know in what fashion. You might just get price stalling. You might get a little dip, okay, and then it goes back up. But just for the moment, just for right now, I'm going to evaluate this day by day, as this picture becomes more clear. But just for the moment, this cycle low here feels like it's going to be kind of weak, like it's not going to be a strong decline down into this cycle low, okay? And that's why I think that this August 10th one is the one that really, to me, stands out at the moment. Now, I can just hear some of the wheels turning for the members that watch this video, and even I'm going to put this out for the general public in this case, but I can hear the wheels turning for some of you watching this video. Does that mean we can go long? We can go long? I don't give advice. I just give my opinion. Okay? Because given advice, there's all kinds of problems attached with giving advice, so I don't do that. Okay, I give opinion. My opinion is that you have to make your own decision about that. Okay, this is not a strong market, period. It's not. Does this look strong to you? It's not a strong market. It's weak. We're in a bear market. This is a bear market. We officially hit 19.9% somewhere around here somewhere, and I think this number right here actually put us over the 20% mark from all-time highs. Okay. Now, I know that day didn't finish there, but it definitely got down to this low, and we definitely broke through the 20% barrier. So, to me, we hit the bear market, and we're in a bear market. And rebounds are going to happen even in bear markets, and that's great. That's just part of cyclical price action. Okay. So, I'll let you make your own decision. I'm not taking any long positions. Okay, I don't get to trade as often as I used to because I'm so busy with my day job. But I will trade to the downside, a short side, because we're in a bear market. So for me, it's simple stuff. I move with the overall trend, and the overall trend is down. Now I realize some people are trying to make a living trading, and they're trying to make bank, as we say. And okay, you have to take more risk, right? But for me personally, I'm going to trade with the overall big trend here, and that is down. Okay, so that means that I'm going to wait to see if there's anything significant coming into there, and if not, then I'll wait for this one. Meantime, I'm accumulating fixed income, guys. That's what I've been doing for quite a while. Okay, let's take a look at the weekly chart. Again, just on the daily chart, I'm looking to see if and when we get divergence warnings. Sorry, not on this one. On this indicator and on this indicator. If those start popping up, okay, then I know we got something going on, okay? That would be an indication that it's possible that pricing is beginning to fade and a decline is coming, like I said earlier, like this. I'm also keeping a close eye on this MACD, which right now looks really healthy. Okay, this looks like strong. This looks like a good push to me. And I think there's a decent chance we're going to break above the 50. Now, is it just going to be one of these little triangles? Does it just break above the 50 for, that's pretty decent though. This was whatever this was, 7-8 trading days. Okay. So, that's my take on the daily. Let's look at the weekly. Let me switch over to my, even here on this is the daily drawing I have here. Okay. You can ignore this for the moment. But just looking at this pattern, it's way over here in what? August 22nd, which it doesn't really line up because it's a daily pattern being drawn on a weekly chart. So let me switch over to the weekly drawing set. Okay. So on a weekly time frame, it's more like that. Okay. Looks like this one right, this line right here needs to be changed. See if I can get to it. Edit. Not sure. Okay, grab the wrong one. Let's try it right there. Edit. Dot 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 dot. Okay. So that's it on the weekly. Look at this weekly. Oh my gosh. Look at this. See, the MACD on the weekly, it's got some work to do before it crosses over. Look at that. Now the shorter term indicators, the Big Daddy and the SMI, they're showing a nice little bounce here. Okay, no signs of divergence warnings like back here forever and a day. Look at this string of divergence. Oh my gosh. See, there's some logic doesn't work well in some time frames. All these divergence dots on the weekly, they're garbage. I just learned to ignore them because they don't look at them. There's so many of them, and yet we had this going on forever. So I don't pay a whole lot of attention to the divergence warnings on the weekly chart, but on the daily chart I do because they're very powerful. Okay, so if this pattern were to continue, then that up there is right around what? Let's see what that is. Yeah, almost 4,400. If it gets all the way up to there. And then this is out until like the third week of August. On the daily, it's like August 10th. So that's close enough. Okay, they're not exactly in synchronicity with one another, but it's close enough. Anywhere from the second to the third week of August, the daily and the weekly are kind of in agreement. Okay, that there looks like there's a decline going on here. So when does this one ends? Yeah, August 22nd. Okay. And looking at that 50-week moving average, it's got a ways to go till it gets there. Right now it is, let's see, that 50-week moving average is 44.30. And right now we're at 41.77. So it's quite a ways off, but it could definitely do it. It could get up there. It isn't too far-fetched to assume it could get up there on the weekly chart, remember. So, these candlesticks tend to have larger range. What is this candlestick? Yeah, 296, This one's 287. So, but we're still quite a ways away for the weekly to tell me that we have a very strong kind of bounce, you know what I mean? And even if we do, again, you have this widening, descending channel, widening, descending, widening wedge or channel. It's just, this is just continues to show this. So let's take a look at that monthly. A monthly, look at this monthly. Oh my gosh. Look at this. Wow. Still just rolling over on the monthly, my goodness. So 3,400 on the 50-month moving average. And I've said that I thought 3,700 would be a number we would break below. I still think that's going to happen. 3,700 is probably somewhere like right in here. Okay, what was this number here at the low? 3807. So we got within about 107 points right there on that candlestick. And since we're about to go into the month of June, this candlestick's probably done about all it's going to do. But I do think we'll break below 3,700 here. We'll get down into this area and come down and at least touch this 50. I think very long term, there could be some bouncing and some stuff and whatever. I think we're going to get down into here somewhere. I don't know how far out that is. I'm not saying it's going to be out in 2025. I don't really know, to be honest, but I do think we could get down into into the 2000s. And I think 50% of this number is possible. That's longer term. That's just kind of more instinctive than factual. Okay, let's finish this up with the hourly chart because I know some people are interested in that hourly chart. Okay. And let me switch over to 500 bars. Dun dun dun. So, what is happening with the hourly chart? Look at this big push. Wow. It's a thing of beauty right there. Big push. So the hourly chart with this kind of push will be a little bit harder to discern what's going on. But let me take a look. Yeah. You can just see this change of behavior like right in here. See how it just kind of flattened out, went sideways. So let me see if there's, I feel like there's a transition going on here between cycle behavior. Let me just get rid of this cycle altogether. We'll finish up with this. I'm not really sure that we can get a firm grasp on the hourly chart, on the hourly cycles, but we'll see what we can find here. There are some things that do stand out. Let me just do this. All right, for those that don't know, immediately you should be able to see there's something here, here, and here. See that? Do you see these dips? Strong, pointy dips. Okay. Now I can just tell with my eyeball that the distance from here to here is not the same as from here to there. Right? It's clear, right? This is shorter. But initially when you look at a chart and you're trying to figure out cycles, that's what you want to be looking for. Strong impulses to the downside that usually have some type of V to them. And those definitely stand out. There's some other ones in there too. There's this one. There's this one. There's that one. There's kind of that one right there, okay? You might even make an argument for that one right there. So those are the things you're looking for when you're looking to figure out cycles, okay? There are other factors, but that's a really good place to start. So let me, since we're already on cycle drawing, these two stand out huge. This one and this one. So I'm just going to pull from this one right here, and we're just going to pull back to that one right there. And then before I click a second time, I'm just going to eyeball this. And it's pretty solid, but the reason I say that is because if we look right here, you'll see, yes, this took off, but there's a bit of a little something right there. That's obvious, that's obvious. And what do you know? Look at this one, a little dip right here. Now, some of that's not really tradable as far as if you're going to trade short side. But I said this before, you know, if you have something this weak going on, then sometimes that's a good sign you can trade long. And this looks like a little weak dip right there on time. Again, I only give my opinion, but if I was an hourly trader, this looks like a long side opportunity is about to happen. That's what I think. This little dip right here is the hourly cycle low. Right on time. And it's a know-nothing little dip, and that tells me, boom. That tells me that. Going into this cycle. Okay? All right, but let's go through the rest of these cycles. So remember that. For those that trade hourly stuff, okay, short-term traders, if you see a really weak cycle low into, price action into these cycle lows, well, That's useful information. It may, not always, but it may mean there's a strong impulse to the upside, okay? All right, let's go through these. Some of these are from last week. We're going to go over them again. Because I think the cycles may have changed, maybe not. 5:30, I think, is the same, yep. So these cycles really haven't changed yet. 5:30, I think that's noon. Which just happened. Isn't that amazing? This just happened, right? Because as I do this video, it's about a half an hour past this point. Well, look at that. Bam. This one is June 7th, 4 a.m. These are probably the same as they were before. Okay. Yeah, 4 a.m. June 14th, 8 p.m. Okay. 8 p.m. And then June 14th, 8:15 p.m. We'll just go with 8. June what? Sorry, June 22nd, noon, my bad. June 22nd, noon. 12 p.m. Okay, that should be more than enough. So you want to be paying attention to what that price action does between these two, yeah. These are long, long hourly cycles. I mean, you're talking 137 hours, which is exactly what we're seeing on the daily, these really long daily cycles. Okay. So that's it. Let's take a quick peek at crude oil. I'm not really going to go over it too much. I'm just going to look at it on the daily, give my commentary. I said last week the crude oil was going to go to 115 to 120. Well, what do you know? Remember that last week? I said crude oil, if you could believe it, was going to break out to the upside and go to 115, 120. Sure enough. Remember these drawings from last week for those that were paying attention? Let me get rid of this wacky time frame. Here we go. So last week I talked about how I was pretty certain that crude oil was going to break above the 115 and go to 115, 120. Well, where's it at right now? It's at 117. And there it is, the breakout to the upside. Remember I said last week this area is getting really tight in here. This area right here I felt like was going to be an area where we get a breakout. Boom! Breakout to the upside. Yeah. Now here comes part of the video a lot of people don't like, and guess what? Too bad. You're going to have to listen to it, or you can just stop the video and go watch, skateboarding or something on some other YouTube channel, okay? But we can thank Brandon. Thank you, Brandon, and George Soros' criminal cartel for gas prices that are so high that people can't even afford to get to their jobs. They can't afford to buy groceries. This is ridiculous. America has more than enough of its own natural resource when it comes to crude oil. And how do we know that? Because less than 2 little short years ago, in the town I live in, gas prices were below $2. Below. I'm in Texas, so we get the cheapest prices in the nation. Below $2. Now I went by the gas station, I think yesterday. I think I saw $4 and 50 cents, something wherever it's at. Ridiculous. They do it on purpose, folks. And if you are someone that votes and leans that way, I mean, it's your choice to vote as you see fit. But seriously, you have to have your head buried in the sand to not admit the criminal activities these clowns are doing. Did you see the story about the baby formula? The baby formula shortage in America. Well, the same clowns up there who put Biden and selected him and stuck him in the White House. If y'all didn't watch 2000 Mules movie, you might want to go watch it. And you'll know what really happened in the 2000 election, in the 2020 election. Okay? But the clown that's been put up there in the White House, and that whole group that's behind him, that whole cartel, okay, this is what they do. They put strangleholds on nations to control people. They do it with crude oil at $117 when we all know we could be at $2. They do it with baby formula. Those clowns up there, which I don't even want to call them an administration because I refuse to call that person the president. He's not my president. He shouldn't even be there. But those goofballs up there, they shut down one of the biggest baby formula companies in the United States of America. And they refuse to take phone calls from the CEO. True story. Go look it up yourself. They have called the FDA, Food and Drug Administration, multiple times trying to get answers from them to resolve whatever problem they have with this baby formula company. They don't even give them a reason why it's shut down. They won't even take their phone calls. They create problems intentionally, guys. That's the whole point. That's what they do. They intentionally create problems. And they're doing it here in America. And they don't just do it in America, they do it in England, they do it in Australia. Why the hell would you shut down a baby formula plant and not take the phone calls from the CEO to help resolve the problem? That's how normal people would work together, correct? Healthy, normal behavioral people, they work together to solve problems. Not these criminals. Don't even take phone calls. And why? So that they could turn around and say, oh, we have a solution. We're going to have the military ship in some baby formula. How about you just reopen the plant? You don't need to try to save the day for a problem you yourself created. That's who some of you voted for. That's what you got set up in the White House. And I don't care if you agree with me or not. That's the real truth. Hope you all have a great Memorial Day. God bless you. Forgive one another. Talk to you all real soon again next time.